Hey guys, welcome to this video. My name is John Watts. I'm a consumer protection lawyer. We're going to look at a tax court case that came out this year, actually March 5th, 2020. And the reason I want you to see this is because if you're dealing with the IRS, you're dealing with back taxes. This particular case involves back taxes and a notice of a federal tax lien being filed. Here's the lesson, or maybe two lessons. You have to submit all the required documentation. So when you're asking the IRS for help, say, hey, I want an installment agreement so I can pay the whole amount, typically the whole amount over time, or an offer in compromise where I'm paying less than the full amount, then the IRS will say, okay, great. We need the following 2, 3, 4 things. Well, you have to submit it, or you give the IRS a perfect excuse to just reject it. And when you're challenging the IRS on something, you need to provide the basis for that. So let's look at this case. So it's a collection due process case. So there are certain things the IRS does that triggers a right to request a collection due process hearing. And so what we have here is a filing of a notice federal tax lien. And we'll talk about that in a moment, but let's look and see what happened. So the taxpayer files his return for 2013. It says, hey, I owe $10,000, but I paid more than that. So I'm actually entitled to a refund, but just put the extra toward 2014. So nothing here to see. This is great for the government. But the government looks at his return and says, actually, your tax liability is not $10,000, but you are deficient. You underpaid by $156,000. And we're hitting you with a penalty of over $30,000. And so they didn't get a response from him. So they send a timely notice of deficiency. And say, look, if you want to challenge this liability, you've got 90 days. He did not do that. So the liability is now not being challenged. And so then the IRS files a notice of federal tax lien toward the end of February 2018. They sent him a notice of that saying, hey, here's what we've done, and you have a right to a hearing. And so the petitioner, the taxpayer, says, yes, I want a collection due process, a CDP hearing. Now, it says he did not check the box indicating he was seeking a collection alternative or requesting a withdrawal of that lien. Instead, he said, hey, I filed my 2013 taxes and I don't owe any money. That's the basis of it. So a settlement officer or an SO gets this, and she sends a letter to him saying, here's when we're going to have the hearing, June 13, 2018. And look, for me to consider any alternatives, you have to give me 3 things. Completed Form 433A. Number 2, signed income tax returns for 2014, 2017, because it doesn't appear you filed those. And then number 3, you have to show me that you're current with your estimated tax payments. So let's take a step back. Why do we need the 433A? Because basically anytime you're requesting an alternative to just paying the whole amount all at once, you have to fill out a Form 433A. Now, why do you have to submit your signed income tax returns? Because if you do not stay in compliance, or if you're not in compliance to start with, which compliance means that you filed your returns and you're making your tax payments, then you don't get any alternative. So the IRS is saying, look, we don't see 2014 to 2017, so give those to us. And how about right now? Are you currently current with your estimated tax payments? Because if you haven't filed tax returns, there's no help. Even if you filed your tax returns, if you're not current with your estimated tax payments right now, now it's not saying that you have no past due debt because you wouldn't be asking for help. But right now, when you're submitting, you have to be in compliance. And so then the settlement officer says, look, you got that deficiency notice and you can't dispute your tax liability, but you can request an audit reconsideration. So here's what the petitioner, the taxpayer, did not do. Did not submit a 433A, did not submit copies of tax returns for 2014, 2017, and otherwise did not have any communication with the settlement officer before the hearing. So Then the petitioner did not call the settlement officer. So settlement officer sends what's called a last chance letter, kind of what it sounds like. Hey, you missed the hearing, but you've got 14 days if you want to send me something. So notice the dates here. June 14, and then we have 14 days later, the taxpayer sends a fax and says, I didn't have adequate substantiation of my expenses, but now I've got that documentation. I'm working with the tax preparer, and we need 21 days to get the tax returns that are missing completed so we can file them. And so the very next day, settlement officer calls the taxpayer, can't reach him. She says, hey, I'm not giving you any more time. Okay, please return my call. Otherwise, I'm closing the case. Notice this. He did not return her call or make any further submissions. So even though he said, hey, I've got the proof, he did not submit that. Hey, I just need 21 days to finish my 2014, 15, 16, 17 tax returns. I need 21 days. She waited 30 days, and he never got that to her. So she closes the case. So a few days later, we get this notice of determination sustaining the notice of federal tax lien filing. And then the petitioner, the taxpayer, files a petition in which he says, I wasn't given a chance to provide my records. And so the IRS files what's called summary judgment, and the court tells the taxpayer, look, you've got to respond. So this was filed on July 11, and the tax court says, hey, taxpayer, you've got till August the 5th. It's about 3 weeks. If you don't do anything, you can lose. Taxpayer did nothing. But then after that, the tax court looks at what the IRS filed and said, you know, it's not clear that you had the required supervisory approval, so we're denying it, but if you get that proof, you can resubmit it. So that's what the IRS did. They resubmitted it, and notice what the tax court, we told the taxpayer respond by November 24th. If you don't do it, you may lose automatically. He did not respond. And so what's a summary judgment? That's to save time, and the court can grant summary judgment when there's no legitimate, genuine dispute as to an important or a material fact. And the person that's requesting summary judgment, the IRS commissioner here, is entitled to that as a matter of law. So the taxpayer did not respond. So boom, that's enough so the taxpayer can lose. But they said, even though that's true, we're still going to look at it. Okay. So what's the standard of review? In other words, the tax court looks at what the settlement officer did. Is it just, does the tax court agree, or do they give some deference to the settlement officer? Well, they say it depends. If the validity of the tax liability is at issue, then we review what the IRS did de novo, which means we look at it just on our own. We don't really care what the IRS did. We just look at it on our own. But where the underlying tax liability is not before the tax court, then it's abusive discretion only. So how do we figure this out? Well, a taxpayer can dispute the underlying liability. Remember, the importance is it gets you a different standard of review. So you can do that if you did not receive valid notice of deficiency or have an opportunity to contest the liability. Well, when's a notice of deficiency valid? If it's properly mailed to your last known address. Well, what's your last known address? It's generally the address appearing on his most recently filed a properly processed federal tax return. So think about that for a moment. If you haven't filed tax returns for 5 years, but you moved 4 years ago, the IRS may still send notices to that address from 5 years ago. You're like, but I haven't lived there. But if you haven't filed tax returns, the IRS doesn't know that. And they're allowed to send to your last known address. So what's abusive discretion? Since the taxpayer had an opportunity to challenge this, did not challenge it, abusive discretion is when the decision is arbitrary, capricious, or without sound basis in fact. It means it's really, really hard to win that standard. So what are the 3 ways that the court looks at this? So, okay, that settlement officer, did she properly verify the requirements have been met? Number 1. Number 2, Did she consider the relevant issues that the taxpayer raised? Then number three, did the settlement officer do sort of a balancing test? The need for efficient collection of taxes and not being more intrusive than necessary. And they say she did. So let's look at some of this. So even though the petitioner, that's the taxpayer, was precluded from challenging underlying tax liability, settlement officer said, here's how you do an audit reconsideration. She didn't have to do that, but she did. Now, an audit's conducted outside the CDP process. Remember, when the taxpayer invoked the collection due process hearing, that's sort of like a court case. And what the court's saying here is that that audit reconsideration, that's totally separate. Okay? We're not looking at that. So settlement officer does not abuse her discretion, declining to wait for the results or request for audit reconsideration. And then they point out, in any event, petitioner made no effort to actually seek an audit reconsideration, even though the settlement officer invited the taxpayer to do that on 2 times. So we're seeing here, we have to respond to the IRS. When they say, hey, you might want to do this, if we're serious about it, we've got to do that. Hey, you might want to send me, or you must send me these documents, then we have to do that. So petitioner, again, that's the taxpayer, is entitled to request a collection alternative, such as an offer in compromise. Hey, I owe, what was it, $180,000 or something? Here's why I think you should take $30,000. That'd be an offer in compromise. Or an installment agreement. Okay, hey, I owe the full $180,000. Let me pay that a couple $1,000s a month, or whatever it might be. But again, the petitioner made no concrete proposal. So the petitioner, the taxpayer, did not say, I want an offer in compromise, and here's the backup documentation for that. Or I want an installment agreement, here's the information to support that. He didn't do anything. And so settlement officer is not required to make one for him. It's just like being in court. The judge doesn't have to make your arguments for you. And so the settlement officer outlined what the taxpayer needed to submit. Remember, these are the 3 things. A Form 433A with the supporting documentation. Number 2, copies of the signed unfiled tax returns. I think it was 2014, 15, 16, 17. And then proof of current estimated tax payments. In other words, show me that you're currently, this current tax year, in compliance. And the petitioner submitted none of those. So the settlement officer did not abuse her discretion, declining to give additional time. And so they're granting summary judgment. But no, they say, we want to tell you, taxpayer, you're free to submit a collection alternative like an offer in compromise or installment agreement, but you have to support it with the necessary financial information. So once you see this case, because it's so important that, and then we'll look at this footnote here in a second, but it's so important to comply with the rules of the IRS. They give you a deadline. You've got to meet that deadline or ask for more time and explain why. If you want an offer in compromise, you've got to make sure you qualify for it and you make an actual proposal with the supporting documentation. You want an installment agreement, follow the rules on an installment agreement. And we see so many people do this on their own, or they get somebody that maybe is not really qualified to help them, and they just blow past these deadlines, and they don't submit the required documentation. And it makes it so easy for the IRS settlement officer to say, nope, I reject it. And then we go to tax court. So it's like there's some effort going to tax court. And that effort could have been used with the settlement officer. But even in tax court, they're like, hey, you need to respond to this. No response. Hey, we're telling you again, you need to respond to the summary judgment. No response. And so why go through all that effort if we're not going to do something? So my suggestion to you is, if you're not going to do anything, then just let the IRS do whatever they want to you. But if you're going to take some action, like do it right. Submit the forms. Follow the rules. Follow the deadlines. Either do this on your own the right way or get somebody to help you to do it the right way. So I just want to point out this one little footnote. The petitioner could have said, hey, I want to withdraw that lien. Remember, it was a big lien, I think $180,000 or something. I mean, that will really impair your property I don't know if it was a building or his personal house or what it was. But it says petitioner did not seek lien withdrawal and request for CDP hearing and did not submit any evidence regarding why he was entitled to a lien withdrawal. So if you don't do that, again, you make it real easy. So this lien is staying on there, and interest and penalties are just accumulating. So very sad to see this happen. But again, I want you to see these cases, and I'm going to keep doing these cases because I want you to stress to you how important it is. Must submit all the required documentation. And you have to tell the IRS what you want and the basis for what you want or for your challenge. So thanks for watching us. Appreciate it. And I'll catch you in the next video. Bye-bye.